In this video, we're going to discuss the current downwards momentum which we still have. And we're going to discuss whether we're going to see Uptober, which everybody's expecting, but it's still not happening. Ethereum remains to be weak. All is going to be discussed in this update for your journey, on your trip, through hopefully a bull market, but at least through the bear market. Let's get started. The market sentiment remains to be super negative, and altcoins are yet again back to the lows or close to the lows, except for a few special ones which are really doing well. So the question is, what's going to be next? And I think a few key events have been taking place that have been pushing down the markets or have been pushing up the markets. And those key events, there are multiple ones, and some of them have a long-term impact and some will have a short-term impact, which we currently see. And I've got three for you, three key events. The first one is the fact that we had the global liquidity expansion in China. And I think we underestimate the significance of that actual event. China has been having a real estate market crisis, has been having a debt crisis, stock markets were going downhill, and also the normal economy is suffering substantially from COVID and everything that happened after that. So what did they do? They decided to do the biggest influx ever, which is 1 trillion yuan, which is $142 billion that has been added into the markets as additional liquidity to be used to stimulate the economy. Now, this is super significant because adding more liquidity into the markets has a direct correlation with the crypto markets and the altcoin markets, which we can see in the graphic next to me, where you can see that once the liquidity starts to expand, every asset that is scarce is going to go up in terms of value against the denominator, or in this case, against the asset that is going to be increased in terms of supply. So if China does this, and that's just a week after we've seen the Fed announcing 50 bips in rate cuts, it is likely that we're going to have a very substantial positive reaction in the crypto markets, which we initially saw, but then the entire crisis in the Middle East started to take place. And you can always question whether or not the event in the Middle East is pushing down prices or whether the other way around is actually the case. But you cannot deny that having geopolitical tension taking place is something that is putting down risk on assets, especially crypto in this case. So we saw this event in April where Iran was attacking Israel during token 2049 Dubai, where we had prices falling by like 20 to 40%. Now again, Iran is attacking Israel. Actually, Israel is in a fight with multiple parties, and Israel attacked Hezbollah in Lebanon. Iran attacked Israel. Then Israel decided to walk into Lebanon to fight Hezbollah even more, and they killed the, well, what is it called, president of Hezbollah, or the leader of Hezbollah, through which that war is extending and getting more heavy. And first of all, we shouldn't be having a war, but it is having an impact on prices in general. We saw gold going up, we saw Bitcoin going down, we saw everything related to the dollar going up, and we saw Brent oil and crude oil going up in terms of value. So gold going up is a direct response in terms of uncertainties where people fly into that asset for safety. Selling Bitcoin is just a panic reaction on the short term, which is usually getting a V-shape back as people start to see that this war is probably going to be heavier and heavier, but not as heavy as most of the people are expecting, to which it's just a sort of mini black swan event after which prices come back to neutral. So that has been taking place, and based on that fact, we saw prices falling again. But also based on technical analysis, we were expecting the prices to fall. But the more important short-term impact is it's unemployment week, which means that unemployment rates, other macroeconomic data comes out, and almost always Bitcoin corrects during such a week. It is almost always a negative week as people and investors tend to scale out of their assets that have risk, after which people tend to buy back in because news is going to be negative, rate cuts are likely going to happen, etc. So these are the three big events that are taking place, and we're currently in the first week of October. If you look at the data, Bitcoin is usually bottoming out between the 7th and 11th of October of that year, which means that after this video, we likely see the bottom of this month for Bitcoin and the markets tend to go up again. That pretty much aligns with the fact that I think that the Middle East is also getting into a more of stable, depending on the benchmark you have, with stable environment through which the focus goes back towards the Fed, the rate cuts, elections, and also China. And I think that this cycle is not going to come from the US. It's actually going to come from China injecting millions and billions of dollars into the markets, pushing the crypto markets forward, as I think that Asia is already stepping in as the biggest player in crypto. So all these events are important, and all these events are important to understand, where I think that selling when a war begins is always bad, if you look at the data. But giving this correction, if we look at the TA, we can see that we are actually in a buy the dip opportunity, which I'll be explaining in the next part. Bitcoin is in a 6-month sideways range, which is fantastic. I've just been to an event in Switzerland. It's kind of the same sort of vibe as Bitcoin at this point. Very stable, very boring, very chill. But we are about to have some serious momentum. So that's what we're going to discuss next. I think we need to look at some very key levels that we need to focus on with Bitcoin. And I think the ETF is already showing the interest that we have in Bitcoin, especially after the rate cut took place from the Fed. We saw actual days of 400 to 500 million inflow in the Bitcoin ETF. The Ether ETF had some inflow too, but in the past week we already saw some outflow. So it's just balancing itself out. For Bitcoin, it's just a matter of finding a new higher low and continuing to have the inflow in the ETF, which I think will happen. Especially since in November and the next Fed meetings, it's expected to have another 50 bips rate cut taking place. Also when unemployment starts to go up and the labor market starts to become weaker. Now, when we look at the actual markets and the actual price action for Bitcoin, you can see that since the high in March 2024, I'm saying the year because it feels like it's 30 years ago, but at least on the 13th of March 2024, we reached $73,000. Since then, we are ranging between $53,000 to $73,000. And all sorts of TA is being created by this range, which is people are making a nice sort of, I don't know what the actual name is, but they draw a line with lower highs, lower lows, which as a matter of fact is true. And you can say that we have seen a new higher low with this mark here at $54,000 as we closed higher than the previous week, which we saw in the beginning of August on the Japanese yen carry trade crash. Now, what we can also see is that every time when Bitcoin gets to a new high, it takes liquidity and goes back down. And as a matter of fact, the exact same has been taking place. Bitcoin ran towards $65,000, took the liquidity above this high. And when I say taking liquidity, it means that if you are short on your position, for instance, you take your stop at the most obvious level, which is the previous high. And if you want to go short, you need to have that liquidity to be able to actually get your own position going, which means that if someone is short, gets stopped out, what happens? A long is open to close that short. So if there are many shorts at a certain level, you get a lot of new long positions which you can use for your own liquidity to make a short and then turn the markets around. So that has been happening, and currently Bitcoin is at a crucial level, which means we had a low at $54,000. We have a level at 65 here, and we just kept falling down, where we're currently taking the liquidity on the lower time frames, which means that if we hold above $60,000, which I think we will, we are likely going to expand towards the highs again, and then we turn around this entire trend that we have been seeing since March of 2024. If that is not possible and panic starts to increase in the Middle East or unemployment is better than expected, Then the next level that I'm looking at is the level around $56,000, which is still positive for the markets and bullish. So I think if you look at it in that perspective, knowing that between the 7th and 11th of the month, Bitcoin is bottoming out, we are getting close towards that point of being able to buy into specific assets. Now, if we look at gold, for instance, gold is doing something that every Bitcoin investor can be jealous of, which is it continues to go up. Gold is currently at 2.65K, which is a new all-time high, and it's just consolidating and going up week after week, which I think Bitcoin is also going to do once it stabilizes itself into a new higher low, once it gets back to 65,000, and once it breaks through 65,000. The only concern that we have is something that we call ETH, which is continuously falling downwards at this point where it just can't find strength. We tried it and it went towards the crucial resistance zone, but it couldn't break back upwards, which I think is going to happen once it goes beneath the recent low, stabilizes there, reclaims the low, and then starts to show momentum. That is also the moment where you're going to be seeing altcoins starting to take momentum, as here I've got Optimism, which basically rejected at the crucial resistance zone and might be retesting the recent lows. And retesting recent lows is not bad. It means that once you go back down towards those price levels, it means that you're just simply accumulating at this point. So if you had a breakout, I will show you a wormhole at this point, which is comparable in terms of price action. If you have a breakout, as you can see here, you take the liquidity above the recent highs, then you've got enough liquidity to reverse the markets back to a downwards momentum. So what you want to see is that if you take liquidity on the other hand, which is taking it beneath recent lows, then you need to have enough strength to keep the momentum going. And in this case, we are looking at that for wormhole around these areas here. But technically for every altcoin that has been making a higher high, you're looking at another double bottom retest for the lows. And we're getting close to it, which means that it's by the dip season. So in general, I think it's still very boring. And I think that you should be looking at that by the dip approach, where, for instance, Ethereum is one to look for, and then you should be taking care and taking note of the weakness of the markets and actually using that opportunity. Interesting altcoins, they remain to be in the ETH ecosystem. And you might say, is he completely retarded? Well, maybe I am, but I'm still sticking to the Ether ecosystem. And I've also been Ether pilled because I've been seeing multiple presentations by Stani from Aave, Sergey from Chainlink, Vitalik from ETH. So, I mean, technically, I think that there's a lot of things happening within the Ether ecosystem that's just not getting the value as it should be. But if we compare that with Sui, which we have been discussing in the previous weeks, I think Sui has been showing a lot of things. First of all, there is space for other layer ones in the markets. Secondly, if the markets start to turn around and it gets hype, then in just a matter of few weeks, the altcoin can rotate back up and just erase losses of the past 6 to 7 months or even years, where an altcoin breakout can just go towards the all-time high in a month, where you are holding the assets for 3 to 4 years, and then in 1 month, it just erases all the losses. And I technically expect that to be happening with a lot of these altcoins that are heavily undervalued at this point, and some have been getting punished, not even by their own strategy or fundamental approach, but just by being on ETH. So the interesting altcoins for me personally remain to be Aave, Compound, Synthetics, the old DeFi coins that have been building, have been progressing, where, for instance, Aave is currently having 12 billion in TVL. Rocket Pool has 3 billion in TVL, but the valuations of the projects itself and the tokens is substantially lower than the TVL, which is different if you go towards ecosystems that have hype, where you can see that the TVL is lower compared to the market cap, where the valuations are a little bit out of line. So I think that everything within the Ether ecosystem is still the one to have. And I think that those will still start to take off, especially since Layer is live at this point. And then the question remains, is Sui going to be a threat? Is Solana going to be a threat to Ether? And I think that that's not the case. I think just like you see Bitcoin and Ether as two different coins, I think you should be seeing Sui, Solana, and Ether as completely different layer ones. And I think, for instance, Solana has high throughput, is in some ways centralized, as Snowden said. But Solana has that high throughput through which, for instance, Deepin can work on Solana with all the transactions that they have. Sui has a nice angle with DeFi, for instance, for specific reasons. But the most compliant one is Ether, where the transaction fees have significantly going down through layer 2s, that people can actually use layer 2s on Ether to be trading DeFi and everything that is secure, scalable, compliant, through which also institutions are more eager to use Ether. So I think in terms of interesting altcoins, Ether altcoins and Ether DeFi altcoins are the ones to have. My strategy is very exciting, which is I keep on holding. And I think you should do that too. If you have a position in the market at this point, a war is not a sell-off moment. If something fundamentally changed when it comes to liquidity or the Fed, yes, that might be a change. But a war, in this case, with these panic events, are just short-term impacts. And I think that ultimately wars are positive, but I think you shouldn't be pushing your emotions into a decision that you don't want to make. So if you feel like you want to, just watch the charts and say, okay, if I wouldn't be having any position at this point, what would I do at this stage? That is by far the best thing that I've been doing over the few years that I'm currently a trader and investor. And I think that if you see the red candles at this point, or the markets at this point that are just accumulating, then if you get to the lower bounds of the range, you want to accumulate yourself into a position. And I've had a few positions that have been doing well in the past few weeks. I'm happy to seize that, which means that I'm rotating a little bit from the profits that I make in one towards something that hasn't been moving, because that is my game. That's how I compound and continue to trade. One of the things that I've actually been very sad about is that I've not been trading meme coins in the past months. I've just been checking the volatility on those, and I was like, oof, very easy to trade high liquid assets. But when you have a professional portfolio in the crypto markets, then I think that seeing oil going up, seeing the liquidity that has been increased, that have a long-term impact that is not priced in, that means that there's a positive correlation with crypto, and that means that you need to hold on to your positions. And if you don't have any positions, you're actually into a lottery ticket at this point, where you can just buy in at a very high discounted value for most of these assets, because the printing has just started and the Fed has done its rate cut. But I think they will do another rate cut where they also start QE alongside China, and that's going to be the big trigger where you continue to see upwards momentum with the crypto valuations. So guys, thanks for watching. What do you think about the new setup in this studio? We've done some improvements. If there are improvements or not, let it know in the comments beneath. Next week we'll be back with a new video. But also, if you are from the Netherlands or any country in Europe and you're traveling to 2 events during the upcoming week, which is Bitcoin Amsterdam, I'll be there on Wednesday, or Zebu Live, which is in London. I'll be there on Thursday and Friday. And I've got the opportunity to be having a podcast with Raoul Paul. Let me know which questions I should ask. And also let me know if you're going to be attending any of the 2 events. Just send me a text message and I'll be happy to have a chat with you, discuss this wonderful bull market that we're currently experiencing. And next week, of course, I'll be back with a new video. Ciao.